Good afternoon, everyone. Am I clearly audible to all of you? Okay, thank you, Kevin. Okay, right. Let me share my screen. I can see today's questions. It's loan EMI. Kevin, it is we are going to discuss some part of the PowerPoint if you are not able to clear that, and we will discuss question. It is extremely a doubt session where I'm going to take all the doubts from the previous modules which I have taken. Okay, so keep on writing your questions in the chat box. I will take all the questions, whether it is related to Excel, PowerPoint, or uh, intro to IB. Like one of you have mentioned about the loan EMI calculation, ADR, GDR, ITR. So what I'll do, I'll start with these questions only. 1 second. Let me share my screen so that I can discuss. I hope the screen is visible to all of you. 1 second. Yes, my screen is visible. Okay, fine. First one is about any other question? Let me first write down what are the questions so that I can see how many raised hands are there for each and every question. How many of you are clear about ADR and GDR? Good evening, everyone. Loan EMI calculation. This is one of the question. Any other? Please write your question. All of you are clear about this ADR and GDR? We look up, okay. Any other? We look up IDR. Yes, in ADR, GDR, I will cover this IDR as well. Okay. Okay, Manish. So these three together, this will cover. Then loan EMI, we look up. Yes. Okay. IRR. That means you are asking about RRI and IRR. CAGR. Okay, this also. So these three are from Excel. This I have taken from Intro to IB. I have discussed these all things from Intro to IB module. This we have taken in. This one is in Excel and Basics of Finance. So definitely I'm going to calculate it through Excel. Any other doubt? See, once the less doubts are there, class will end early. So I want you all to clear all the doubts by today only. Reason being, my next session, you all will be redirected to another trainer. Yes, yes. We look up, H look up. One second. Oh my God, so much you have written in the chat box. Let me read. One doubt, so many days. See, Ravi, for the placement related query, I'm not the right person. You can connect with the placement team. Okay, that is not my domain. See, Manish, what I'm going to do today, we are going to discuss few questions from a test paper. Okay, so these all topics plus test, and if time permits, we'll discuss one small case study. Fine, fine. Okay, so let's begin with this idea, ADR, GDR, and then we will cover the Excel part. Then one test, and last, a small case study, which is related to Lehman Brothers crisis. Stop share. I will share my screen. Okay, so let's begin with ADR. Now, before discussing about the ADR, let me first tell you what is the process in IPO. How many of you are clear about IPO process? Fair enough. So in case of general IPO, what happens? Any Indian company wants to raise money. Companies have two options to raise money. One is equity financing, another is debt financing. ECM or DCM, equity capital market, debt capital market. So either equity financing or debt financing. So IPO could be through equity and debt, both would. In case of debt, if IPO is there, that means that is they are raising money via issuance of bond. In case of equity financing, they are raising money by selling their equity portion. So that is also called exit strategy. Am I going too fast? Okay. So IPO where? No, okay. So in case of IPO, what happens? General, whether you take CRISIL, DOMS, NICA, previous IPOs, NIC, and so many which were available in the past 6 to 8 months. The general phenomenon is what Indian company are raising money via Indian investors. Okay, so this is an IPO. Any Indian company wants to raise money, they are looking for raising from Indian investment, domestic investors only. This is IPO. ADR is also in initial public offer. They are also raising money. Purpose is equity financing or the debt financing. So in case of ADR, what happens? Indian company wants to raise money via US investors, American investors. So that is why it is called as American Depository Receipts. ADR is nothing but American Depository Receipt. So how this works, the process flow is mentioned over here. I'll keep on explaining about basic intricacies of the ADR, how it happens. So here you have understood about raising money. That is the basic concept of any of the IPO. So here also, but the difference is only they are Indian company is not raising money by Indian investors. They are raising money from US investors. So how the registrars and transfer agent, how the domestic custodian and other participants will work. This is shown in that mind map. This is the process flow. Let's say there is an Indian company, ABC Limited. And what is the objective of Indian company? They want to raise money. Raise money from foreign investor, American investor. So who are the parties involved? One is the domestic custodian. Domestic custodian means this custodian will be responsible for holding the securities in electronic form. So domestic custodian, let me write down over here. Purposes, safekeeping of securities. So how this process works, Indian company, if they want to raise shares, to whom it needs to deposit? They will, if this company is going to deposit the shares with this domestic custodians. Once domestic custodian receives the share, it provides acknowledgement to this overseas depository. You know about what is depository? Depository, that means it is responsible entity which is responsible for safekeeping of securities. Okay, in India, we have two depository, NSDL and CDSL. Similarly, in overseas also, there are depositories. So this depository, this domestic custodian will provide acknowledgement to overseas depository, indicating that they have received the shares from Indian company. Once they receive the acknowledgement, once overseas depository receives the acknowledgement, they will issue ADR to American investor. Okay. So here, as I told you, that Indian company deposit shares with the domestic custodian, and then domestic custodian, after receiving these shares, will provide acknowledgement to overseas depository. And then once the acknowledgement is being received by overseas depository, they are going to issue the shares to American investors. And these American investors will provide money to, will give money. Means number of shares what they have received, you provide money. For example, in IPO, there are debit of funds from our bank account with respect to the shares we receive as an allotment. So here also they provide money and they receive the ADRs, American Depository Receipts, in their accounts. Okay. Now, how the proceed will be transferred once this money is received by American investors in dollar form. It is means there will be some charges. Charges will be debited, and thereafter rest amount will be transferred to Indian company. They will take their fee or the charges whatever, and then these proceeds will be transferred to Indian company. Rest of the amount. Second thing is how these corporate action benefits are given. Same process as we all are receiving corporate action benefits. These American investors are also receiving the corporate action benefits. For example, Tata Motors. Tata Motors ADR. So one ADR is having 3 shares. If they have, let's say 10 ADRs, American investor is having 10 ADR of Tata Motors, that means they are having 30 shares. One ADR consists of 3 shares. So this way, number of shares in one ADR is different. Whether it is Reliance Industry or others, ICICI ADR and other ADRs, the numbers are different. Coming to this part about the corporate action benefit, let's say this company has announced dividend. So the process, these investors will be receiving that corporate action benefit. Okay, so all the corporate action benefit will be received by these American investor. Route is same. Route is through domestic custodian. Domestic custodian will provide the acknowledgement to this overseas depository. Then the benefit will be received by these American investors. Yes, now question time. I'll just check what you have written in the chat box. My screen is not visible. Just raise the hand. The screen is not visible. One of you are saying visible. This ADR, you all can see this screen where I have shown the ADR part. Visible, visible. Okay. Manish, you are not able to see the screen. Fine, fine, others, you all have confirmed. Please check your device. I think there is some issue with your system. You are not able to see the screen. Okay. Fine. So here, the process is clear. Whosoever asked the question is clear to you. Process about the ADR. Okay. So this way, the process. And I have shown you that NSE IFSC, that is IX also, International Exchange. Now the website is different. Earlier, if you are typing NSE IFSC, you used to redirect to that page where you can see how many shares are listed over here. So that is for any investor who wants to invest in foreign companies like Tesla, Apple, and other shares which are listed in Indian Stock Exchange. That you all can check that. Whereas these all are listed on American Stock Exchange, NYSE. Praveen, I have just explained about the ADR only. Praveen, you mentioned in the chat box that you are not understanding what ADR stands for American Depository Receipt. 1 second, let me write down. Who is better, ADR or GDR? See, Arjun, this is not about comparison related to which one is better. The point is, let's say any Indian company wants to raise money from US investor. So they will go through ADR. If they don't want to get money from US investor, they want the money to be raised by other investor other than US investor, they go for GDR, global depository receipts. European investors are there and other countries. So that is the basic difference. Rest all process is almost same. How they are going to raise, they are going to hire investment bankers for that. So this all process is same what happens in case of initial public offer. Okay, rest all things are quite similar, but these entities are like overseas depositories involvement will be there, domestic custodian is there. If you want to ask the company's perspective, like it depends. Tata Motors wants to raise money from only US investors, they will go for that. Based on different condition, based on the economic condition, if they feel this country where they are going to invest, from where they are raising money, probability of getting profit is higher, probability of getting growth is higher, they will invest in that. So it depends on the analysis part as well. The economic analysis is being done, where they are going to raise money, where they are investing. And from the investor's perspective also, investor will see that where they are investing. Top-down approach or bottom-up approach you might have heard. So these all analysis are part of fundraising. One second, let me read the questions. IDR are only for Indian companies. Yes, IDR is just reverse of ADR and GDR. That means any foreign company wants to raise money from Indian investors. So that will be IDR. IDR means Indian depository receipt. Here, just reverse the process flow. In case of Indian company, if it is, I'll just make certain changes to clear your question. Gaurav, you have mentioned about that. I'll just make changes. Okay. In case of this Indian company, if there is an American company and this US company wants to raise money, rest all process will be same. They will deposit the share, domestic custodian will be there. For us, it will become overseas depository. Now here, instead of ADR, it will be Indian depository receipts and they will pay in rupees. These are Indian investors. The example which I'm quoting, I'll show you the site so that you can understand it as IDR. Means you are investing in the companies, US companies, for example, Apple, Tesla, and so on. So many companies. Earlier, once it was started nearly 2.5 years back, only 8 shares was listed on the NSE IFSC platform. Gradually, it has increased. And it has reached more than 25 shares. Now, next question is, no, IDR are not only for Indian companies, it is for Indian investors. IDR means foreign companies are looking for Indian investors to invest in their companies. So how they can, there are certain requirements like KYC and due diligence are there in case of this IDR. How much a retail investor can invest, there is a capping. These all details are easily available on the NSE website. Okay, next question is, Prachi, I had already shared it with the team and asked them to share with through LMS. Okay, wait. IPO process flow stuff is available. Yes, in cash equity. Once we are going to discuss, Manish, I'm addressing your question. Once we are going to discuss cash equity, then we are going to discuss the detailed process of IPO. Detailed process of IPO, I'm explaining here in few steps. For example, any company, any Indian company wants to go public, means they want their share to get listed on a stock exchange. What are the basic details? First step is They are going to hire the investment bankers. Investment bankers are going to help them out in drafting the red herring prospect, DRHP. DRHP includes all the required details for approval. Like SEBI goes through the detail of the company and then approval is being provided. They approve, and this is a green signal for them that yes, all the due diligence is perfect and they can go for IPO. Then they are seeking for approval from stock exchanges. Why stock exchanges? Because they want their share to get listed on the stock exchange only. So NSE and BSE, two stock exchanges are there in India. National Stock Exchange, Bombay Stock Exchange. So there also they need approval. Once these all things, these due diligence part is done, compliance aspect is done, thereafter they go for the different another step that is about marketing of IPO. That is you call as roadshow, advertising. In the meantime, it has been decided what could be the pricing. Pricing is decided either it could be a fixed price issue or book building issue. In case of fixed price issue, price is already set. How they decide the price based on different analysis, either discounted cash flow method or the relative valuation, how the peer groups are doing, what is the rate for the peer group. Based on that, they decide the price of that particular issue. So then book building issue where there is a range given, range is also calculated like what should be the price. In cap price and floor price, there is a gap of 20%, means this gap should be maintained, 20% price range, it should not be more than that. Then once based on the demand, they get the number of share, how much demand is there, how much it is subscribed or oversubscribed. If the issue is oversubscribed, that shows huge demand of that share, particular share. Thereafter, once it is done, now the time for allotment and then listing on the stock exchanges. Thereafter, price stabilization period. This way, IPO process is completed. Okay, so Manish, I have addressed your question in brief. Now, taking the same part in ADR, what happens? It is quite similar. These ADR and GDR also, once they are raising issue, any funds from foreign investor. But how the shares are given in case of IPO, what happens? We apply through either online or offline. Here also, it can be done through online and also offline. I have given you one option by which foreign companies are raising money from Indian investors. So Indian investors can invest through that platform. There are 32 registered, as far as I'm updated related to that information. That means there are 32 registered brokers who are providing the services where the investors can buy this depository receipts. Like means they can invest in American shares, right? Shares of American companies. That idea. Okay, so that I have explained in brief. I hope it is clear to you. Now I'll just go through the next question. Prachi or others, just confirm me that you all get one Excel sheet in your LMS where you can get the basic detail about sample data. One sheet is included. Second sheet contains the shortcut keys or VLOOKUP, HLOOKUP. Did you get that file? How many of you could see that file in your LMS? 1 second, let me check. No one? Not received. Okay. Most of you have written not received. Not even one single file. Because two of the files were shared. One was which has the shortcut keys in first sheet. Second sheet contains the sample data, sales data, school data. So 2 to 3 sheets are there in first file. Second file contains VLOOKUP, HLOOKUP also and few other functions. Okay. It's not available. Okay, Prachi. So many other files are available. Which in that file, can you get the sample data? Only the videos. Okay. So do one thing, don't delay it further. You all can simply download from Google. There are so many sample files are available. What you need is only sample data where huge amount of names, numbers, and all figures are given related to sales, school data. you can easily download any of the file that will work. And simply you can create your own. In the meantime, I'll again mention them that you all are not able to access the files. Abhijit, this is the query session, like doubt clearing session. So once the students are taking any of the questions related to previous topic, we are covering here. Okay. All the doubts related to previous 4 sessions. Because thereafter you will move to different trainer and you will be learning FSA, financial statement analysis, and few topics. Once it is left, you can again realign to me. Okay. Sample data is available of prior batch Excel classes. You can use that, Gaurav. Okay. If the sample data is available, that can also be used. Sensitivity. Okay. Abhijit, good books of investment banking. Just raise a ticket to me. I will share few links. Okay, Abhijit. Links are there which are free of cost, easily downloadable. PDF books are available, which you can download. Okay, now coming to ADR, GDR is clear. Now what was the next question? I'll simply show you the website. 1 second. Give me a minute to show you. Okay, all of you can see this screen, nscix.com. Once you go through this website, you will find that detail about this US stock. You can go to equity, derivative, currency, and US stock. Just click on US stock. You will get list of those stocks which are available. So Apple, Alphabet, Amazon, all the stocks are available over here. You can check up to 2030. Yeah. So 25. Earlier, once they have launched this platform, it used to be 8. At one go, they have started with 8 companies, and thereafter they have increased it. Okay. 1 second. Wait, let me read the question. Okay. Can you please create a PDF for Excel in short? For Excel, one PDF, just give me a moment. I have one PDF available. You all can go through that. If I can easily locate it through the session, I will share the like link over here. PDF, I think we won't be able to share, but yes, link I can share. In the meantime, you can check the PPT also, like one book for PowerPoint also. I'm sharing with the link. Wait a minute. I think there is a file size issue. That is why I'm not able to attach it here only. But give me a minute, means what I'll do, I'll just share both the PDF with the team. One is related to Excel PDF, that is a book. And the second one is PowerPoint PDF, right? So that those are books which you can easily download. Now let me share my screen and check. So what are the other queries which are left? What two questions related to ADR, GDR and IDR are clear. Now what are left? EMI function. Okay, fine. Let me share my screen. My screen is visible to all of you. Excel is visible. Okay, fine. So loan EMI. One question I'm taking from here. Let's take this one. Or I'm taking the question only. Control C. Adding one sheet over here. Okay, this was the question. I have copied the question. I have shared sample data got okay. So everyone, this is the small sample data which you can create. Rest all things can be uploaded in LMS only as per rules. Okay. Now what? This one you can see the question. Loan EMI I am discussing one more time. Here, you all will give me the numbers. PV, 80 lakhs. What is the rate of interest? 8%. This is R. This N for 15 years. We can do two ways. Either I'm doing it here only, equal to this divided by 12, because EMI we are paying on monthly basis, so rate of interest will be this. And N per is into 12. Now you want me to create the amortization table? Who asked this question? Amortization table. Okay. All of you who have any doubt related to this amortization table, please look into this. So let's say we can take a date, random date once the loan is, I'm taking it 1st of January 2024. From where the EMI should start, or you can simply take a number also, just avoid the date. 1, 2, 1 second. This is the date format, that is why this is coming. I need to change it to numbers. So how many? 180. I will drag it to 180. Okay, fine. How much? One is left. Okay, done. Now second is this is the principal amount, this is EMI, this is interest. I have not written completely. You can write EMI. This is principal. Now, first we need to calculate the PMT. What is the EMI? So through PMT function, we'll do what is rate? This one divided by 12. N per is 180. PV this. FV 0. Type is 0. So 76,452 is my in EMI. 76,452.17. EMI will remain same throughout the tenure. That's why I have taken this. How we are going to calculate the interest? What is the outstanding amount? It will be 80 lakhs. Yes, who is going to calculate interest? What will be the interest? Please write in chat box. What should be the interest in this section? See, only few have asked about the amortization table. So I'm taking it that all of others are aware. Okay, what about others? Only one has typed. Okay, here if you are referring to this cell, that will be easy into then select these all three and click to downward. Yes, Urvashi, right. Look here, our table is created. Okay, only difference is I have not mentioned date over here. As per date, you can take. First will be blank. Reason being, EMI will start by next month. Suppose the loan. Oh, sorry, Prachi. Wait. I will copy and paste in here. Paste here so that you all can copy this question. Right? You all can see the question. You can simply copy it and paste it in your Excel. No need to write. Done? Prachi, did you get the question? Others also can copy and paste in your Excel. Okay. So this way, now it is clear. Who asked about the EMI? Manish asked, I guess. Any other question? Got it. Okay. Fine. This is done. Now next question is about VLOOKUP. Once again, see what I have done. I'll show you only what you need to write. Only serial number, EMI, interest, principal, and outstanding. First, you need to leave blank. What I have done, I have written 1 and 2. You will click both the numbers and simply drag it to 180. Once you reach to 180, what is that? N per. Then EMI, we have calculated. What is EMI? This through PMT function. EMI is going to remain same. So simply click it till 180, it will remain same. Double click. Interest, I have calculated for first cell. For first cell, what is this? Outstanding amount, that is F14 multiplied by 8% divided by 12. If you select the cell over here 8%, your answer will be wrong. So either you are going to write manually, or if you are selecting it, don't forget to freeze it. Okay, through F4 or the dollar sign. I'll show you that as well. So here what I have done, I have written 8%. Just remove that. You can do this. You can select this cell, F4. Okay. So that will remain, that will be blocked, and again it will be followed. You can do either ways. Fine. Rachi, clear? Now, anybody else who have doubt? Okay, then moving to next part. What is the next question related to Excel? Who asked about VLOOKUP? Okay. Okay, fine. I'll take your question, Prakshi, who has written in this. Let's look up after the questions. Let me close it. First was X lookup, V lookup, H lookup. So V lookup and H lookup will start first and then gradually moving to next. I'm copying this. The table is same which we have practiced in the previous session. I have copied the table. You need to mention the order ID. For example, you are looking for these IDs. What is the formula we will put here? VLOOKUP equal to VLOOKUP open parenthesis, lookup value, what we are looking for, this order ID. Then what is the table array? Here I am going to find it. So I'm going to select it till here. Within this range only, within this table array, I will find my values which I'm looking for. Then column index number. These are columns 1, 2. Since I have selected this area only, I'm looking for revenue. So 1, 2, 3, 4, 5. So column index 5. Then true, that means approximate match, or false, exact match. Either I write true, false. I'm writing it false. You can write 0 as well. Okay, so 1585, this one is 190, right? Just double click on that. You will find all the answers. Who asked about the VLOOKUP is clear? Urvashi, I will just cross check it and revert to your question. Okay. Yes, who asked about the VLOOKUP? Please raise hand. Rudra, is it clear now? Your doubt is clear? Reshmi also asked. Okay. Freezing in HLOOKUP. Wait, I'll show you Arjun. HLOOKUP and freezing. We will use the same table here. What we have done in HLOOKUP, since you all are aware, once we are not freezing it, Excel is going to extrapolate to downward. That means if I'm writing any column, let's say 1, 1, 2, 5, 6, you all are aware what exactly I mean to say. This is going to multiply all downward. And if I'm referring to this cell, I want my number to be multiplied by this number. So for first cell, it will take this number. For next cells, it will follow with these all, which are blank. So if I want my this number 112 to be multiplied by 89 for all these columns, for all these rows, I need to freeze it as we have done in different examples. Okay. So in case of loan EMI, once we were calculating, we were referring to 8% rate of interest. What I have done over there, I have freeze that so that it should not consider the cells which are below 8%. Right? So you understood, Rudra? I guess you asked about this question, Arjun. Freezing. So F4 function, you just click on the formula. Thereafter, you need to put your cursor on that particular cell number and then put F4. F4 will freeze. If anyhow it is not working in your keyboard, you can manually do it. Before and after that cell reference number, you can put freezing. Look here. This one, B to AM. From where we have started, this B5 from order ID to last, AN 8. Clear? Okay. Any other question anybody asked about IRR, XIRR, and IRR? See, IRR, what is that? Internal rate of return, where we are not considering the specific date. For example, there is any investment. So year-wise it is taken. If I'm going to calculate IRR, it is perceived that cash flows are occurring on regular intervals. Year 1, year 2, year 3, year 4. In which cases it is helpful. For example, if you are calculating the return IRR of any of the annuity. So usually the annuities are coming at a fixed intervals. Okay. Any amount which you are getting, the frequency of getting the interest, frequency of getting the cash flow is same. In that case, IRR will help you. Second case is where the cash flow frequency is not regular. It is occurring on indifferent period. For example, this mutual fund case we have taken in the example. So where it can be used, you have invested also, you have withdrawn certain amount, again invested. These dates are not occurring on regular intervals. So in that case, XIRR proved to be accurate to provide you CAGR, compounded annual growth rate based on these dates. And it will consider all cash inflows and outflows. What happens? What are the limitations in case of PV, NFV function or CAGR? In case of CAGR, we are not allowed to put the specific dates. We are considering one-time investment only. It is not allowing us to enter multiple cash flows. Whereas in case of PV and FV formula, we have one option that is PMT. PMT function is there. We can invest lump sum, we can add PMT also. But those PMTs should also be same. We cannot put different PMTs in that formula. Are you all getting my point? What I mean to say? I'm telling you the difference between these all functions. where it can be used. What are the basic situations where you can use which function? Okay. Anybody who is having any doubt? Yes, Manish, please ask. Whosoever is having doubt, please write in chat box. Sure, Manish, I will again share it with the team and ask them to upload in the LMS because there it will be accessible to all of you and you can access multiple times. Freezing in, Arjun, your doubt is clear? Freezing in natural EMI loan sheet, wait. Which one? Which we have done just now? This is we have just done about this example which we are discussing, Prachi. So what we have calculated, this one is the PMT, this EMI, and this one is the interest rate. Interest rate for first EMI. Once you are done, raise the virtual hand so that we can move forward. How to calculate outstanding amount? Outstanding amount is in first, it is first one is outstanding only. You have taken a loan of 80 lakh rupees. So once we are starting, the outstanding will be 80,000. Once you pay EMI, then only it will be reduced. Your outstanding amount, which will be reduced. How? The interest is also there. You need to pay how much interest? 8%. EMI, which we have fixed at 8% interest rate and number of years 50 is this, which we have calculated through PMT function. Now, how we are going to calculate interest? Interest on first installment will be outstanding amount multiplied by 8% divided by 12. 8% rate of interest divided by 12. So that will be your interest on outstanding amount. How do we calculate principal amount? EMI minus interest will be the principal amount. This principal we got by deducting this interest minus EMI. EMI less interest, you will get principal. And how we get outstanding amount? First outstanding, that is 80 lakh minus this, we will get this. And once you take all three together, select all these three together, click on this sign, your table will be completed. Okay, any other who is having doubt? See, this class is helpful for all of you who are having doubt, who are practicing. Who are not having any doubt, that means either they are good enough or they know the Excel very well or they don't understand anything. They don't want to do that. So better if you have not done it earlier. See, value, I'll show you once again, Prachi, with the same question. Just pay attention. EMI, you should drag it down. Interest, look what formula we have used. This one. Outstanding amount is in F14 multiplied by this rate of interest, 8%. You need not freeze any cell. Simply write 8% divided by 12. Okay, you will get this interest rate. Then here, what I have done, EMI minus interest. This is the principal amount. Then this 80 lakh minus principal. F14 minus E15. Once the first line is done, interest, principal, and outstanding you have calculated. Select these all three together, click here, and your table will be done. Till 180, it will be completed. Last number which you want to see, it will be shown as -1 rupees. That means completed EMI. No outstanding. You try one more time, it will be done. Now, any other question? IRR, XIRR, I was explaining. So just write down in your chat box. My question is, in which case we are using IRR, in which case we are using XIR. And you can give the example of any of the product also. For example, in case of FD, for example, in case of mutual fund, equities, or any project, any corporate who wants to raise money, which interest rate will be feasible enough or fair enough to calculate, whether it is IRR or XIR. Please write. Yes, I'm waiting for the answers. Where we are going to use IRR. Okay, Chandan. One answer I have received, IRR for regular intervals, fine. Next is IRR is used during regular period of intervals and XIRR is used when there are irregular period of interval. Fair enough. Okay, we'll take a short break of 5 minutes. You all can ready with another questions related to any other module which we have discussed so far. So we'll discuss after a 5 minutes break. Okay. Okay. I'll just read one more point. Both financial metrics used to measure the profitability of an investment, right? So these are the points that you all have written in chat box. I have mentioned it here so that others can also see that. Okay, 5 minutes break and then we'll come back. I hope everyone has come back from the break. Okay. Fine, then we will discuss about rest of the subtopics and any questions. Done? One second, let me go through the chat box. If there is any question which is unanswered, I will reply to that. Yes, Urvashi, you asked about the X lookup. See, it can be created by this table only, but I have not tried it many times. So I'll just give you a brief idea about how it works. You can try on your own. If you find any difficulty, you can connect me later as well. So let's say that we are copying the same table here. You can write the name of, let's say, either a salesperson or the employees. Then instead of VLOOKUP, you will just write equal to XLOOKUP. And then in open parenthesis, we were selecting the order ID. In that case, you can select either vegetable, clothes from this item. Select the order ID and next is after in comma, you can select the total revenue. Parenthesis close, enter. Just try using this. I hope it will work. Okay, in the meantime, what I'll do, I'll try to create one table and maybe we will discuss or I can share the ticket as well. What is relative cell referencing? See, in case of relative, you can take it example of anything. What here also you can take relative cell referencing. I will show you. Like unit sold, unit price. What is the total revenue? It will be multiply of this unit price and how many units are sold. That will give you total revenue. Okay, wait, I'll do it for you. What is a relative referencing? Where you are connecting with two cells. Wait. I'll simply copy the table. Okay, here you can use it. It is like relative referencing. Control C, sheet 2. This is what relative. Here you have put the formula. Selling price, unit sold. How we are going to determine the total sales? Rather than writing, I prefer copying it. Why? To just save time. Otherwise, it can be written. I can write it down for you and just, it'll take another 2-3 minutes. So why to waste time? Simply copy and paste just to make you understand. This is relative referencing. Means what you have copied, it is, if you are dragging it to downward, this formula is going to apply. So next, what they are going to do? It is going to multiply the selling price of cookies multiplied by unit sold. You will get whether the table is having 100 cells or more than that, it can be easily done. It's just one click away. Now, what is absolute cell referencing? In case of this, if you multiply with some other rates, which is mentioned over here, let's say. If I multiply this without, and if I try to drag it down, will it work? No. Reason being, it is extrapolating to downwards. And here there is no value. It is text written. That is why this error has come in the third cell. Fine. What if I freeze it? This is in M33. If I freeze it, how our answer will be changed? That will apply to. Now just do it. Look, now this is each and every selling price is multiplied by this 120. So that's what we have done in loan table also. Absolute referencing means you are freezing that particular cell which wants to be multiplied with these all numbers. Okay, Reshmi, I think your answer is clear. Okay, Chandan, I'll come to RRI function also. I'll take your question. Next is yours. Right, Reshmi? Urvashi, sorry. Urvashi asked about this. Relative and absolute is clear. This one is relative. This one is absolute. The next question was RRI. So we have discussed about the CAGR. There only we will discuss RRI function. We have used this table. Like someone has invested 1 lakh rupees in 2019 by 2022. What is the compounded annual growth rate? It can be, I have told you, we can do it with 3 ways. One is through the formula end value divided by beginning value to the power 1 by number of years minus 1. This simple formula is derived from PV and FV function only. Once you try to place the position of PV and FV from right hand side to left hand side, you will get this formula. So formula is derived from PV and FV only. Nothing different. Now, second part is through rate function, which we have used. Rate is through Excel, rate function. N per is 3. What is PMT? We are not putting any regular investment. So PMT, I am putting 0. What is my initial investment? 1 lakh rupees. Future value is this 190. Beginning of the investment period, 24%. That up to 2 decimal point if you want, you will get 23.86, right? So this is through rate function. Now RRI, in some of the software, it is not enabled. Simply write N per, that is 3. Here you need not put negative sign. It is not required. You simply write these 3 parameters and you will get your answer. If you want to convert it into percentage, answer will be C. So you asked about RRI function. One second. Okay, Chandan, I hope your question is answered. Any other who is left with an unanswered question? Fine then. All the questions related to Excel are clear. No doubts related to Excel part. No doubts related to basics of finance part, and ADR, GDR is discussed. Any other doubt which is left? Then we are going to take certain questions. We are going to do one exercise. You all will answer the questions. Objective type questions we'll discuss. Where is transpose written? See, you create a table. Let's say this one is the table. Then I'm copying it. Then paste the special. Just go here. Here it is paste special. Click on paste special. Here, this one. Here you will find transpose. Paste the special. Last one is transpose. Just check into that and write. Your table is created like this. Okay. Who asked about this? Urvashi, you got it? Where is the transpose ribbon? Just right click on that, select the table, right click, you will find paste special. In paste special, you will get transpose function. What is next question? If function. See, in case of if, you need to give a condition. Like we have explained it with the example of that 1,50,000 wala case. In that case, you are putting in inverted commas. You will create exact function. Means you are giving the clear statement what exactly you want. If it is more than that, then true, false. In that situation, you need to use if function. 1 second. We have done with. Yes, this one we have taken one example that let's say you have certain values for 1 year, 2 year, 3 year, 4 years cash flow. For example, revenue of 4 years, 4 year revenues. And if you want to put if it is more than this 1,50,000, if it is less than equal to 1,50,000, then how you are going to put the formula equal to if and then function. It will apply. Wherever it is less than 1,50,000, it will show false. Wherever it is more than that, it will show the number only. Okay, so it is just to identify very clearly that where the values are less. So that in case any actions needs to be taken or if there needs any improvement is required in that particular area, whether it is sale of any different product or services, they can do that. So by using these functions, they can highlight where they need any amendment, changes and all. At a glance only, they should understand. They should not go through the entire table and the data. Once you highlight it or change the colors, it will be easily highlighted and it should be easily understood. Okay, for that, Hema, I need to create one example from any of the financial statements. So maybe in the next session, we will take that, or I will create 2 or 3 examples related to that. Okay. So there with the DCF analysis, you will understand it more clearly. Okay. Any other question left? No. So quickly moving to questions which I wanted to discuss. PowerPoint is clear. No other questions related to PowerPoint. How many of you started preparing any of the PPT? Just raise the virtual hand. Okay, few of you. Anybody used already ready-made template in Canva? Okay. What you didn't understand, Pooja? Which point? Please write in chat box. Canva. You can easily go through and try the templates which are available. Some templates are free of cost. They will allow you to download. And some you won't be able to allow. You won't be able to download. So try using some templates which are free of cost, which are downloadable. There you need to make amendments only. See, ready-made templates are there. What you are doing, you are erasing the existing content and you are putting your own contents. Yes, free of cost is definitely sufficient for most of you. No need to pay. I don't advocate buying it. I prefer using whatever is easily available, or if you are more keen to prepare customize, create your own. Fine, then let me share the questions. We will discuss certain questions which will be mix of PV and FV functions, and certain numericals are also there. If some of you are able to just open your Excel along with this classes, you can do so. Or there are questions also, theoretical questions, which you need to answer. This is totally MCQ. Okay, so I'm sharing my screen. Not all the questions, I'll discuss few of them, which are easy. Okay, I hope all of you can see my screen. Only A, B, C, D is expected from all of you. Question, read the question for you. One, you will just give me answer A, B, C, D in the chat box. That's it. Okay, I'll wait. If sufficient answers are there, we'll move to next question. So determine which statement is true among the above mentioned option. NPV is positive, then the project is considered to be viable. NPV is negative, then the project is feasible but not viable. NPV is preferred over IRR as a technique for capital budgeting. All of the above. Okay, one answer, 2, 3, 5. So whosoever has given A and B or C, please check your answer. It is all of the above. NPV is positive. Definitely, if NPV is positive, project is considered as viable. If NPV is negative, then the project is feasible but not viable. Right? It is preferred over IRR as a technique of capital budgeting. True. So all 3 points are correct. That is why all of the above. Next is easy. How to calculate present value. Question number 2. Yes, it is discounting only. You are going to discount the future value. You will get the present value. 3. Question number 3. The concept of present value relates to the idea that discount rate is always higher. Just read all the points and then 1 second, let me increase the font size. Is it visible to all of you? Once I'm increasing it, I'm not able to see the chat box and not able to read the questions. I hope it is clear now. What is 3? Some of you have written A in question number 3. Please check your answer. No, it's not A, it's not B. It is not always correct. The discount rate is always higher when you invest now. The money that you have now is worth more today than an identical amount which you receive in future. Time value of money. So this one is correct. PV and FV, what we have discussed is the idea of time value of money only. Okay, now coming to question 4. Which of the following is not a financing activity? Repayment of long-term debt, issuance of equity, investment in business, payment of dividend, which is not a financing activity. Yes, investment is business is not a financing activity. This one is financing, repayment of debt is, payment of dividend is financing activity. This is investing activity. Okay, so question number 4, whosoever have written C is right. Rest all, please recheck. Okay, here the question is, he wants to accumulate 10 lakh rupees after 7 years, rate of interest 6%. How much money he need to invest now? It is asking for PV. With Excel, what you can calculate PV, or through the manual formula also. This is the future value he wants to accumulate. So future value divided by 1 plus 6% to the power 7, you will get your answer. Okay, once you calculate, you will get this. I don't think there will be any doubt. Okay, you calculated. Fine. So based on your answer, I'm putting it B. I'm not moving to Excel and calculating, but yes, one of you have calculated, so I'm putting it. Now next is 6. Nishi invested 10 lakh rupees for 10 years, 8% per annum is the interest rate. Value, simple question, PV and FV. No need for explanation. You all can do it. So I'm moving ahead. Client requires 60 lakhs after 10 years. He is investing 10 lakh lump sum. Annual rate of return. You need to calculate rate. Through rate function, 60 lakh is requirement. That means this is future value. 10 years is N per, and this one is 10 lakh present value. Don't forget putting the negative sign. It's a cash outflow, and then you will get the rate of interest. Okay, here, this is about internal rate of return. You should simply create a table from 0 to 1, 2, 3, 4, 5. 0 here, this is the cash outflow, and then cash inflows will have no negative sign. It will be only 20 lakh. 2 lakh, sorry. 2 lakh. Then first year, 3 lakh, second year, 4 lakh, 3 years. See, these are on regular intervals, so we don't need to calculate XIRR. IRR will go. I think we have done this question in the class as well, but I'm not putting the correct answer. Once you solve it in Excel, you will come to know. Fine. Okay, 1 second. FEMA test will be aligned by team. That will be after completing the sessions. Not in the middle, they are not aligned. Aligning the test. Once they align, maybe they will inform you prior to any of the tests. Okay. For practice, what I can do, some of you are trying to get the question. What I'll do, I'll copy and paste certain questions here. What this is the best thing I can do. Although this is not the regular practice, but still some of the questions I can share it so that you all can practice. I'll share at least 5 to 6 questions in the chat box. Let me see if I can copy it or not. You all can copy it in the Word file. See, as per format of the course, all the things, all the study material needs to be uploaded in the LMS only. But still, I'm okay. These are few questions which we can discuss, and we'll do up to 20 questions. Now, next question is here. ABC Limited wants to, question number 11. ABC Limited wants to replace its existing machinery with modern machinery, which is higher production capacity. The decision is what? Financing, investing, working capital, or capital budgeting. If some company wants to replace existing machinery with a modern machinery and they want to invest, in which decision it will come? It will fall in financing decision, investment, working capital, or capital budgeting. Yes, most of you have written B. B is right, investment. It is an investment decision. Okay, investment, B. Now next is 12. Let me highlight it. Now, dash is related to planning, organizing, directing, and controlling of financial activities. Financial decision, capital structure, investment decision, or financial management. Okay, this time everyone correct. Financial management. No wrong question answer. All right. Which of the financial decision is related to disposal of profit? Investment, financing, dividend, capital budgeting. All right, this time. All correct. So they are disposing the profit. That means they are providing the dividend. These all questions are numericals which I have copied. Okay, the main objective of financial management of an enterprise is to maximize the production cost, maintain payments, maximize the business expense, maximize the profit. Easy. Right. Maximization of profit. Which of the factor affect dividend decision? Preference of shareholders, earnings, stability of dividend, or all of the above? Question number 22. All right. So preference of shareholders, earnings, stability, everything. Now next is dash refers to planning regarding financial needs of the enterprise, various sources of raising funds and their optimum utilization. Financial planning, capital structure, financial management, none of the above. Yes, I'm just reading the answers. So, why you all have written B? '23. Financial planning, yes. A. Some of you are confused and written financial management. See, it is, we are talking about the planning. It won't be management, it will be planning regarding financial needs. Okay. Now next is the dash decision involves a determination of total amount of assets needed, the composition of the assets, and whether any asset needs to be reduced, eliminated, or replaced. 24. Yes. Chandan, your answer is right. Rest all are looking for asset management. It is investment only. See, in the previous question, we have discussed a new plant and machinery, which is having a more production speed and accuracy. They are buying that. That is investment decision. So here also it is investment decision. How much, what is the total number of asset needed? What should be the composition? What if they want to reduce it, eliminate or replace? That is investment. Okay. Now next is long-term finance is required for current, fixed, intangible asset or none of these. All right, everyone. B, fixed asset. Working capital management is long-term or short-term investment decision. Ravi, working capital is short-term. B. So B answer is correct. Okay. Okay then. So this much only we will discuss today in the questions. One more point I would like to discuss, as I asked you that we'll cover a short case study of the small case study. Just give me a minute to share the screen with you. Wait, Chandan, I'll take your question. I was locating the file. Now I can share my file with all of you. Just a minute. Okay, 1 second. I'm just going through the questions which are available in the chat box and simply checking if I have left any question which is not answered. See, Ravi, you have mentioned that after calculating first month EMI, how to track it, you select all three together. Interest, principal, and outstanding. These three cells should be selected together. And then you just click on that plus sign which is available at end. Just double click it, your table will be completed. See, asset management versus investment decision. Asset management, investment decisions are different. Investment decisions are where you, let's say you are an individual, just understand from the perspective of individual. What is investment decision according to you? If you want to buy some financial instrument, I'm talking about financial like fixed deposit, or you want to buy any of the financial instrument, or if you are going to buy a property, anything where you are investing, which is going to increase over a period of time. The value of that asset is going to increase over a period of time. It is your investment decision. Okay. Whereas in case of asset management, it is a little different prerogative in few areas. For example, if you have plant and machinery, if you have a fixed asset, then as a company, how you are going to manage. If the new plant and if you want to invest in new plant and machinery and liquidate previous one, that will be part of asset management for a company perspective. Okay. And similar term, asset management, if we are talking about in terms of the financial, so you might be aware about the mutual fund concept, asset management and mutual fund. So whatever assets which are pooled together and they are investing in securities, whether it is equity or the debt, That will be asset management. That is in terms of personal finance. And here it is in terms of the products or the company perspective. Okay, so I was about to complete this. This is very small case study related to subprime mortgage. I think most of you will be aware about what is US subprime crisis. Just raise the virtual hand. How many of you are clear idea about what was subprime mortgage? Anybody who can write in chat box? Not knowing. Okay, Katie, no problem. Others? No idea. Fine, we'll finish it, quickly finish it. What is subprime mortgage? You might have heard about 2008 financial crisis, right? Lehman Brothers bankruptcy. How it has impacted the entire world. Not only the US market, not only the Dow Jones Industrial Average, which has fallen down 4.5% on that particular on a single day. And here it has impacted the other market as well because the collateralized debt obligations were sold out to other investors also. Not only it was available in US, it was sold out to investors of different countries as well. So it has impacted the entire market once this real estate sector has gone down. The steep decline in real estate prices. How it works, I'll just describe few points what subprime is, then how you will understand. So subprime is below average credit score of individuals which are taking out mortgage and they indicate that they might be a credit risk. I'll make it simple to understand. For example, there are three categories. The two categories you can take initially, prime and subprime. Who are the prime borrowers? Who are having a good repayment capacity. Their income is good, they can repay, they don't have any default history. So their credit score is good. They are prime borrowers. If some prime borrowers seek for loan, they are readily accepted. Reason being, they have a clear track record. They don't have any history of not paying the or defaulting the loan. So their credit score, KYC is intact, their future earning is secure based on their KYC, based on their earning potential, they can be given loan at very easy. Now, coming to subprime, that means below average credit score, or they might be having a default history of not paying the loan in previous years. So low credit score is one. Their repayment capacity is is also a question mark. They might not be able to repay. There could be different issues. Maybe their job is not that much secure, their skills are not that much so that they can get regular income. So these could be a few areas where you consider that subprime borrowers are below average credit score individual who are going to take mortgage. Now, the interest rate which is associated with subprime mortgage is very high. Reason being, it is they are clearly aware that if subprime mortgage borrowers are there, they might default. So to compensate that, they are charging higher. So high risk, high rate of return. High risk in terms of low credit score, below average credit score individuals, then they are charging high interest rate. So 2008 financial crisis has been blamed in large part of proliferation of subprime mortgage, which are offered to unqualified buyers in the years leading up to MET. You are all aware that as a layman, everyone can easily understand what is prime, what is subprime. Whosoever can easily pay the loan should be offered loan. Why they have given loan to someone who there is a question mark on repayment capacity? Even a layman can understand. Then bank, knowing that this person might default, then too they are offering a loan to them. Why? So they are simply welcoming the crisis on their own. Now we will just understand through the complete process how it happens. It is like you will understand it through the securitization process. First, we'll understand the securitization process. And with that process only, we'll understand the situation, what has happened in 2008 with Lehman Brothers. So what is crisis? There is any unstable situation or the negative changes that is termed as crisis. In this, we will understand what are the factors responsible for this crisis, what were the reasons, and how it impacted the political, social, and economical uh, phenomena. And it created instability in all these factors. And how US government has declared the bailout package, what are the different actions taken by them. If they have given a bailout package, why they cannot save the Lehman Brothers? Because the amount was so high. So they could not save the Lehman Brothers. And during that time, there were certain changes or bailout packages were given to AIG. AIG was the one who was saved by US government only by the bailout package. So prime and subprime, we have just understood easily, like easy and deserving candidate who are the strong net worth individual, they are the prime borrowers, or they fall in the category of prime loan. Subprime, poor quality, average net worth, poor credit rating, default history, these are subprime. So this is a process flow of securitization process. I'll explain this, and through that only we'll try to clear you what exactly happened in very simple way. So for example, here you can see in these are borrowers. See, so US citizens we are talking about. See, since we are talking about US subprime, these are borrowers, and borrowers are approaching bank for loan. Okay, till now the situation is fine. If you are seeking for loan, there might be purpose. So what is the purpose here? Purpose is housing loan. It's not personal loan, housing loan. These borrowers approached bank for housing loan. So for housing loan, what is the general process? You need to provide the property papers. So property papers are mortgaged with the bank, and against that property papers, they are providing you loan. So that is what, like a collateral security. If you are not able to repay the loan, they are going to forfeit. Okay. So this is mortgage. Now, just imagine the situation when n number of borrowers are approaching the bank for housing loans. Bank will be having a mortgage pool. This is what? Mortgage pool. And now with the mortgage pool, SPU, special purpose vehicle, is created by bank. This can be understood as an agent of the bank, special purpose vehicle, where they are going to create securities from this mortgage pool. Okay, so you might have heard about asset-backed securities, mortgage-backed MBS, ABS. This is mortgage-backed security. Now, the basic purpose or the basic feature of any of the bond is what? They are debt securities. There should be any of, like, it should be given rating by any of the credit rating agencies. So these SPVs has approached credit rating agencies. You know about the CRISIL, ICRA and all. These are credit rating agencies. So CRAs, credit rating agencies, give a rating to that bond which is issued by these banks. So this SPV has done securitization of this illiquid asset. Mortgage pool is illiquid asset. Why liquid asset? Because it cannot be converted into cash. It's not like equity. It's not a Reliance share which you can sell in open market and can in cash it immediately. No, it is illiquid asset. So by illiquid asset only, they are creating a mortgage pool. They are creating a security out of that illiquid asset. Okay, so basically you understand bond are, and these bonds are sold out to investors. So ultimately banks were earning from both ends. One, they are taking loan, they are providing loan to the borrowers, they are earning rate of interest on loan. And here, based on the mortgage pool, they have created the collateralized debt obligation, CDOs, or the bonds through this SPV. And once the bonds are sold to investors, they are raising money. So both ways they are earning. It was a win-win situation for the banks and they were earning. They have appointed financial intermediaries, brokers and all to sell more and more properties so that or to attract more borrowers who are willing to take housing loans. And during that point of time, pricing of the property was going to be increasing a lot. Nobody has thought about the situation once the property prices are going to crash, what is going to happen? In case the borrowers who are not able to repay the loan, if they default, what is going to happen? So that happened because this CRA, these credit rating agencies has given rating to the bond that collateralized debt obligation. So these bonds were issued to the investors. So during that time, T-bill yield is very less, treasury bill yield where they get 1% interest. And if the bonds which are offering higher interest rate, more and more investors will be looking for getting higher interest rate. So they invested in this bond, mortgage-backed securities, MBS, or collateralized debt obligation. Right? So this is about securitization process and how this kind of situation has arisen once the property prices crash down. Once the property prices crash down, who is going to default first? These subprime borrowers who don't have the repayment capacity. Let's say a property which is costing 1 crore rupees. After the property crash, if this 1 crore property is available at 70 lakh rupees, then what a general borrower will do? They will default. Why to pay a loan and EMI or interest on this 1 CR? If this property, the same property is available at 70 lakh rupees. This is very crude example I'm giving, but you can understand this faster. So a person who has taken a loan of 1 crore rupees and paying the interest and all, if the property prices has crashed down, this person has defaulted, then bank will, what is the situation of bank? Bank will left with mortgage pool only. Once they will go to market and sell the property, it will be available at a less rate because abundance, quantity, demand is less, quantity is more. In that case, the prices will go down. This is simple demand and supply equilibrium. Okay, so this is the securitization process. The next step, how it happened, this equilibrium I was talking about. So this, I'm opening each and every. So rise in property prices. Once the situation was property prices was continuously increasing. So P is the price, initial price. This is the quantity demanded. Once the price has increased, quantity demanded is also increased. New demand has increased. Okay, so this was the case once there was a rise in property because people see prices will go more up. So quantity demanded will be more high. Again, now what happens once the property, there was a fall in property prices? Price decline. So quantity demanded is also, quantity is more. More quantity than price is decreased. As the quantity increased, the price has decreased. Reason being abundance in quantity. That is why demand will be less and the price will go down. So this is the case of fall in property prices which lead to default. This was the certain data. This is certain data which I have taken from website or Bloomberg, where you can easily see the bank liabilities has increased. The bank losses has increased during that period. In 2007, it was not happened in only 1 year or 1.5 years. It was a scenario which was started from very beginning, maybe late 2005, 2006. Okay, but gradually it has shown the remarkable change. You can see here, as I was mentioning about the 2005-6. 1 second, let me take the pen. Here you can see. From here you can see the steep downfall. How housing price trend. Initially it was increasing. It is high. And this is about 2005 and 6. And then 7 onwards, then 2008. So bond market has collapsed, housing prices crashed, the rating of the bond or collateralized debt obligation, that is mortgage bond, has been showing the red signal. Then what are the actions taken by the government? In these kind of situation, what a government does, they do debt restructuring. That means they are reducing the burden to the public. How they are going to do that? They are going to reduce the tax burden. The tax bracket is being reduced so that they can pay more in form of EMI. If they are paying higher amount in taxes, they will be getting less amount. They will be they will left with less amount to repay as EMI. So once the tax burden is reduced, they can increase the repayment capacity. The second thing is increasing the tenure of the loan. If they need to finish the loan in 10 years, it has been increased to 15 years. What is going to happen? If the tenure is increased, the EMI burden will be reduced, less EMI. Fine. So these are few measures which the government has taken, renegotiation of loan terms. Because once prime borrowers will start defaulting, then the situation will become worst. So lower income group power has been increased, external commercial borrowing were at the normal interest rate. These all were the situations, bailout packages and debt restructuring was done so as to restore the situation. This was AIG I was talking about. $85 billion loan was given to AIG by Federal Bank to save this. This is kind of bailout package. And then during that period only, Bank of America has bought Merrill Lynch in $50 billion. So you see, once you see BOA, BOAML is the joint name which is appearing nowadays. It happened in 2008. These are the short few lines about the Lehman Brothers. They have filed the bankruptcy on 15th of September 2008. And what was the difference between the asset and liabilities? It's very less. Their liabilities has increased a lot. It was not only within the 1 year. It was happening since long back once they were involved in this collateralized debt obligations and all. So once the property prices has been decreased, the demand for that collateralized debt obligation also decreased. People will stop buying that because they know there is something wrong. If the housing prices are going to decline, then definitely there is situation where the collateralized debt obligation, the issuing company might go bankrupt. Okay, so that was all about this brief case study. Okay, fine, everyone. That was all about today's session. Most of you have raised questions, and I hope the queries are resolved. So next session will be most probably, it will be related to financial statement analysis. Maybe some other trainer will take that financial statement analysis in few sessions. Thereafter, your batch might be redirected to me. Okay, you will get the notification by the team. But in case you need any clarification, any doubt, you can still keep in touch with me through ticket. Just raise a ticket, write your question. I'll be responding to that. Yes. Okay, Pooja, that will be available in LMS also. Thank you, everyone. That's all for today's session. Thank you. Keep sharing your feedback as well. Thank you and all the best. Thank you.